All right, today we're going to take a look at Strike and Strife. These are newer products that Strategy, formerly MicroStrategy, has put out. These are interesting. So in the past, we've talked about MSTR, we've talked about MSTY, and then obviously how those all relate back to Bitcoin. Because at the end of the day, all of these products are all directly correlated in some way or the other back to Bitcoin's performance, right? So in order to understand any of Strategy's products, you need to have an understanding and conviction in Bitcoin, right? But for today, what we're going to do is we're going to take a look at Strike and Strife. These are interesting, different solutions, very creative. I listened to the recent interview with Michael Saylor in, what was it, the True North guys, Punter Jeff, and Michael Saylor brought up a good point that people always talk about fix the money, fix the world. Well, Bitcoin did that, right? Bitcoin fixed money. And so Michael Saylor saying, well, I'm not trying to fix the money. Bitcoin has accomplished that. What I am trying to do is to fix the capital markets and create better products. So some of the examples he gave is, we're going to get into this. Right now, for dividend stock, I mean, what the hurdle rate's 4%. I mean, I don't know. Look it up. Like that's about how they've historically performed, 3 to 4% on dividends. And he says, I can outperform that and do it in a very strategic, more efficient, more effective, with a strong risk-reward ratio. So we're going to get into this. So why don't we dive in? So what we're looking at here is Strike. The ticker symbol is STRK. And the way that this works, it's an 8% Series A convertible preferred stock. So what does all that mean? It provides a dividend, okay? So it provides an 8% dividend annually. This is payable in cash or in shares. I'm gonna mix and mingle Strategy and MicroStrategy. Okay, I'm just gonna say MicroStrategy. They can choose to dilute this and send it out in shares, right? That's a decision they can make. You still get the 8% return. This is convertible, okay, into common stock at a price of $1,000 per share. That's interesting. Today, we are trading at, let's take a quick look. I know it's near 400. Yeah, $416, okay? So you have to believe, you don't have to believe, you're going to get paid the 8% dividend no matter what. So you've created this floor, and then you do have potential upside as well, which is convertible at $1,000, and these are calls out into 2028, which those cycles, we're going to take a look at some of these cycles and where these match up and the likelihood of it getting to the $1,000 that's convertible. But it's pretty interesting, because what you've done is you've ultimately created a floor, right? No matter if Bitcoin's crashing or running like crazy, you're going to get an 8% dividend. And when we get to 2028, or if Bitcoin, I think, is above 12, or MSTR is above $1,200 for 20 to 30 days consistently, they can call that due and then convert you over. But you get the upside. That's the cool part. You created a floor with potential upside. Pretty interesting stuff, right? And these two solutions are for people that are looking for less volatility than Bitcoin or MSTR, which is highly volatile. And there's a lot of people out there where they are in their investment life, the other investments they have, their risk tolerance. These are interesting. Fixed income is always an interesting approach, right? So Strife, STRF, is a 10% Series A perpetual preferred stock. What this means is that you get a dividend, a 10% annual dividend paid in cash forever, as long as MSTs are around. Pretty cool stuff, right? So conversion feature, it is not convertible. Okay, this is purely and only a fixed income instrument. So if somebody's retired, they don't want the volatility, 10% return is substantially better than other fixed income. If you look at T-bills, I don't know where we at, 4 or 5%, so it's double that. Even the stock market has historically performed, let's say, at 9%, maybe 10%. That's with tremendous volatility, right? We've seen years that are performed at 23, 24%, and years that we're very negative. So there's volatility. This removes all of the volatility from that. 10% return, which is very healthy for fixed income, is available there. Now you might ask, well, why would MicroStrategy offer any of these? Well, with Strike, for example, they're pretty much, I'm going to call it printing money. You're loaning them money, right, that they get today, and they don't have to pay you for 3 years, right? And they're going to pay you out this 8% annually, and Bitcoin's been outperforming that dramatically, right? So you're allowing them to buy more Bitcoin, and they don't have to come up with that cash, a bigger portion of that cash until 3 years out. Yeah, I get the 8% thing, right? With Strife, similarly, they get all the upside. They're going to say, we're going to take on the risk, whether, no matter if it's fluctuating, it's going up and down, you get 10%, we're going to keep all the upside. Kind of a win-win across the board there, right? So some of these that we're looking at is options to provide that fixed income that people are looking at. But the question then comes into, well, what happens if Bitcoin crashes? At what point would MicroStrategy be forced to sell or get in such a bad position? What would the Bitcoin price look like in order for them to get to a point where they can't fulfill and pay those dividends? Again, this is all educational. This isn't financial advice. But we're going to take a look at here is a few different price points, right? So I believe right now their average purchase price is about 68,000, right about 69,000. Let's just call it that, okay? And they have close to 560,000 Bitcoin, the most any entity owns other than Satoshi Nakamoto himself. So that's impressive. And so let's take a look at this. Right now we're at 103. Well, that's well above 69. They're good. Let's say we drop all the way down to 70, right? Right around what their average purchase price is. Well, because their debt, I believe, is substantially, because they're getting a lot of this debt at 1% or below interest rates, so it's very low. Their operating business, from my understanding, their software business, that cash flow can sustain and pay for all of that outstanding debt, right? Now, the stress begins at 40K, okay? This is when leverage starts to tightening, but it's still above the critical levels. This is based on some analysis. Again, not financial advice, but 40,000, stress begins. 25,000 becomes critical. We're approaching cost basis on some of the loans. Refinancing gets more difficult. Default zone could be around $15,000. Again, this is me just asking AI some stuff, so these could be totally wrong. But this is an AI analysis. Says the default zone is 15K, and if we go below 10K, that's when things get real nasty. So let's take a look at some charts, okay? And we're going to come back to some of this other stuff, but let's go ahead and we're going to take a look at some charts. What's the likelihood that Bitcoin hits some of those figures? What we're going to do is we're going to pop over to one of the most beautiful charts there ever is, in my opinion. And what we're going to take a look at is the Bitcoin power law, okay? So as I've discussed in the past, Bitcoin power law shows you what the floor, the support level is here in red, and then what the resistance level. So this is logarithmic, okay? That's how they can get it on this linear chart. is cool, clever math. And these power laws are not unique to Bitcoin. They happen all throughout the world and the universe. And it was identified to, let's apply this to Bitcoin and let's see how it gets back tested. And when it was back tested, take a look at this. Pretty impressive. This was not fit to the Bitcoin data. The information was laid out relative to the Bitcoin price points. And guess what? We have operated, I believe, within 99%. You can see a few times we have peaked above, but we've stayed above this resistance level, I'm sorry, support level for the last, Bitcoin's been around since 2009, but they've got this running back to 2011, right? So 14 years, right? And it's stayed within these ranges. So then the question becomes, okay, let's take a look at 70K. Right now, okay, so let's get this. So this says 420. We're going to go, let's just get close. So we're going to go to 510. That's where we are today, okay? May 10th, 103. The floor, the absolute floor, which this has stayed within, is $40,000. Well, we just talked about 70,000. We're good there. And let's say the stress begins at 40,000. Might be stressful, but guess what? In the history, this chart, and things are accurate till they're no longer accurate, right? But so far, this has been accurate. The closest that will come is to a stressful situation at 40,000, okay? However, based on where we are in the cycle, we expect the bull run to take off and run. If not through the end of Q4, there's now looks to, historically, we would have expected it to run through Q4. There's a possibility this might be running into 2026, okay? And so let's just go to, and I've been proposing that November of 26 is when we start to reach a floor. Now, again, that might shift out, but let's go to November of 20. I'm sorry, what am I talking about? 2026, November 26. Okay, November. I'm way past my numbers. November of 26. Look at this. Well, let's just look at it this way. Yes, their cost bases are going to continue to rise due to the fact that they're continuing to buy, MicroStrategy is continuing to buy Bitcoin, right? And they're buying it at these higher levels. But they own 540,000 Bitcoin. So as they buy more, that cost basis isn't going to jump up dramatically. It will go up, but it's going to be at this more sustained kind of gradual increase. So therefore, what we're looking at is, let's just go to the safe number. Let's go to 70,000. When do we get to about $70,000? Right there, right around. And this is the floor. We never expect to go below $70,000 by the end of 2026. Interesting, right? So yes, there is risk with these solutions. If you believe in Bitcoin and are convicted and believe that the Bitcoin power law, which historically for the last 16 years, at least 14 based on this chart, has performed within these ranges, you can make informed decisions to invest in some of these products. That MicroStrategy and the Bitcoin performance will not get you into a default range, okay? Because we're already above the 40,000 floor, and by the end of 2026, we're looking at a $70,000 floor. Very safer, I'll never say very safe, but safer for these types of investments, right? So that was a quick look at that. Now, let's take a look at some other items here to take into consideration, and maybe when it makes sense to invest in some of these solutions, right? And so if we look at some of these, again, let's just do a quick recap. So Strike is going to provide that 8% floor with the upside that is convertible into the stock. Then we have Strife, which is 10% dividend paid out. You get no upside, but you're locking in a 10% return in an over-collateralized asset, right? Pretty cool stuff. So the question then becomes, well, within the Bitcoin cycle, When does it make sense to invest in each of these products, right? So we're going to look at Strike, we're going to look at Strife, we're going to look at MSTR, we're going to look at MSTY, and we're going to look at Bitcoin. And when does it make sense to approach these? From a timing standpoint, we're going to take a look at that. But let's just talk about from an individual's risk tolerance standpoint. Who are these ideal for, right? So Strike, that's convertible. It's somebody who wants yield plus the upside potential, okay? Trying to cap the downside, they want the upside potential. Great. Strife, simply stable cash flow income. Maybe somebody that's retired, they don't want to deal with the ups and downs. Stable 10%. There you go. MSTR, high volatility traders, or people who just want juiced returns on their Bitcoin. What Bitcoin does, MSTR can do 2 to 3 times that. Okay? 2 to 3 times the upside, 2 to 3 times to the downside. People who like volatility and can stomach it. MSTY, this is interesting because it creates an income stream but is directly tied back to the volatility of MSTY, okay? So you can think, I mean, it's like MSTR, but you get a dividend payout, right? So that's a mix of income that's got a high performance associated with it, right? And then the last one we'll take a look at is Bitcoin itself. This should just be part of your base no matter what. Because at the end of the day, all of these are derivatives of Bitcoin itself. And we're going to talk about maybe, now that we know who each of these are for, maybe it's a hybrid approach. Not so much before different individuals and where they are in their stages of life and stages of investing, but it might be something to look at. Where are we at in the Bitcoin 4-year cycle? And when does it make sense to get into some of these, right? So, what we're going to do is we're going to take a look here at the 4 different phases of a Bitcoin 4-year cycle. So you've got an accumulation. Okay, this is 12 to 18 months before you have a halving. Boring price action, weak sentiment. This is the best time to accumulate. Okay, accumulation. Pre-halving run. So 6 months before the halving, price starts to climb up on the hype and people are looking into it. Narratives build up, right? Now, again, I get it. These future 4-year cycle may not play out the same because we have so much Bitcoin on the market. We had 98% of Bitcoin mined or something like that, and the level of adoption. But let's just say these continue to the cycles continue to perform as they have. Post-halving bull market, 6 to 18 months after the halving, massive upside, FOMO, retail re-enters. This is what everybody dreams and talks about. But guess what? This is, I don't know, 12 to 18 months out of 4 years, right? And then we've got the blow off top, post-halving, the mania, the top. Then this is where it gets interesting because you also have the correction associated with it, okay? So when does it make sense to invest in any of these different products, right? So Strike, that convertible solution, it's best when Bitcoin is undervalued, okay? And a bull market looks inevitable. So what I mean by that is that what you're going to do is you're capping that downside, but you want MSTR to run so that you can be converted. So you want to buy it within that time frame that you believe that it's going to outrun that market. And we can take a look at some of those numbers as well. So when we come to Strife, this is that safe haven kind of thing. No exposure to equity up or down, right? You can buy. This isn't a bad one that after Bitcoin has gone on a run, right? And we're kind of in that down part of the cycle, the bull market. It's a way, if you wanted to convert some of your Bitcoin over to Strife, you limit the downside, and then you still get paid out, right? So you could, whether you reinvest that 10%, right, back into Bitcoin, or you just continue to hold the cash and kind of ride it out till you get low in the market, and then you convert that back over to whether it's Strike or MSTR, MSTY, or Bitcoin. That's a play in a down market, right? Now the other thing we're going to look at is MSTR. So with MSTR, we're looking at the best time is during that bull cycle, right? Because you're going to get that juice returns 2 to 3 times the performance of Bitcoin, and that's going to be an ideal time because you're going to see that run up there. All right, MSTY. This again might not be a bad one. I mean, and I don't. This one I'm not quite sure how this one's going to perform in a down market, in a bear market. But this is typically good for when you've got that choppy, boring kind of thing where Bitcoin might stagnate. You want the yield over price action, right? Now, you do need this to continue to be volatile because that's how you can do these covered calls that they offer. But that might be that happy kind of medium because Bitcoin does operate within a boring cycle actually the majority of the time. We get these crazy bull runs, but those happen relatively quickly along the 4-year cycle. So there you go. And then Bitcoin itself, I mean, always should be dollar cost averaging in my opinion. It's the foundation. Hodl through all the cycles. You're not really coming in and out once. I mean, you can. There's a whole bunch of different approaches. Do what you want, but I kind of like the hodl through. So through all that. But anyway, one of the best times, let's say you put more heavy or limit orders, is obviously when we're looking at a down cycle. When we're looking in a bear market, I mean, I like the idea of dollar cost averaging on a regular basis, and then putting some of those bigger orders in towards the bottom in those bear markets for Bitcoin itself. So I'm gonna do this real quick, and then we'll wrap this one up. Here is so in a cycle, right? Where might it make sense? So right here in the bottom here, this whole area that we were in between 16 and 20, etc. Great time to be buying Bitcoin itself, right? Unbelievable time. Actually, I'm gonna use a past cycle just because this one we're not fully through it. But you can see here, this would be a great time to be buying Bitcoin right near that support level, the asset itself. Then when we start to get into some of these cycles here, what you might want to do is this is when you're looking at Strike, right? Because it's convertible. So as it starts to run up, maybe you buy some of that to keep it steady, and then you have it convert. Now again, this is into 2028. I get all that. But it's something to keep in mind, and that's the cycle because you probably do want it to convert over, and you're going to give yourself the best opportunity for that to occur, right? You probably wouldn't want to play it out so that it comes due here because you might have to wait a long while later, right? Strife, maybe not a bad time to convert in this bear market. You're reducing the downside. You're getting paid an even dividend, and then you can convert over, or I mean, I shouldn't say convert. You can sell it and then purchase a different solution. MSTR, yep, again, right around here after that halving, you want to catch the upside, right, of that juiced up upside. And then MSTY, I mean, maybe it's the post-halving, maybe it's the accumulation phase. Isn't a bad play as well because you can have some pretty awesome dividends while it's not, MSTR isn't kind of in this just growth trajectory wave going upwards. So there you go. Really for today, what we did is we took a closer look at Strike and Strife. Really new products. I should say really interesting newer products out from MicroStrategy, and I expect them to keep listening to the market, hearing what people are wanting, and then saying we're going to solve that through Bitcoin as the underlying asset, and we're just going to provide it in an easier to use, better collateralized solution in a format that you want, because not everybody wants crazy volatility. That's great for MSTR, right? Not everybody wants that, and some people want more fixed income to survive and live. Great. They've created that opportunity for them, which didn't really exist before in the Bitcoin world, right? You have to say you sell off a little here and there. This created a fixed income with Bitcoin as an underlying asset. So, take a look, like and subscribe below. Let me know your thoughts on Strike and Strife and some of these other products that MicroStrategy out there. Maybe share a little bit about your thought process on where you invest in these in the life cycle, the 4-year Bitcoin cycle, in any other topics you might want to cover as well. Happy to help. So keep stacking those sats and stay sovereign and enjoy.